What's up, guys? Welcome to Oz Wealth and welcome to another video. Interesting day today in the stock market. It's pretty static, as you see here. Not much of the gain. The entire market on the trend to slide down a little bit. As you see here, the S&P 500 lost 14.27 points, almost like a third of a point of a percent. The Dow lost or gained like 0.15%. The Nasdaq 101 point, which is equivalent to like almost 0.75%. The Russell is losing also 0.5%. As you see here, the Nasdaq today, the S&P, I'm looking at the S&P and looking at the bigger performers of the S&P 500, like Apple, like Microsoft, they did not do well. If you look at Apple, a little of a loss. Microsoft, a little of a loss as well, and Alphabet also a little of a loss. Alphabet and Alphabet and Apple and Microsoft, those are alone are almost like the 50% of S&P 500. So no wonder the market is not doing well, and the S&P 500 is now ready to take some break. I think it's overbought, and all the market is still it's ready to pull back. And I think it's a very attractive opportunity to buy some index funds tomorrow. I think I'm going to add more to the total stock market index funds. I think it's a buyable opportunity. And there is no rocket science here. This is the underlying mechanism of how the market works. It's not like rocket science. Those three stocks are, if they're not doing well, the S&P definitely is not going to be doing well, despite the other sectors. If you see here, utilities, consumer staples, financial, industrials, materials, they're all in green, but the overall market is trending down. Healthcare is zero gain today. Real estate zero gain today. The consumer services, communication services, consumer discretionary. Tesla is not also doing well. The entire information technology, which is like big chunk of the S&P 500, almost like half, is not doing well, and a big loss as well on energy is starting to trend down really dramatically. So with that being said, no wonder the market is not doing well, and I think it's a great buyable opportunity for tomorrow. As for my Robinhood portfolio, we are standing at $90,511. We started the day as pretty positive, trending all the way up to like 7:10 a.m., which we peaked out at $91,429. To start trending down all the way back to sell off all the way to the bottom of the day at 11 a.m., $89,689. And covering the loss in the last the last 2 hours, all the way to like gaining all the loss that we had earlier at the day, to end the day at a loss of like 0.01%. So it's pretty flat for the day, as I'm not like super heavy in tech. We're heavy on Tesla, which is consumer discretionary, and Apple and Visa, but we're not like super heavy on tech considerably. So as for the day, we're down 0.01%. As for the week, we're up 1.22%. For the months, we're up 5.47%. For 3 months, we're up 1.05%. For the year, we're up 23.31%, and for overall, we're up 28.73%. As for the Robinhood portfolio, right now, as I mentioned earlier, we're standing at $90,511.78. As you see here, Tesla pulled back almost a little more of 0.5% at $649.20. Apple pulled back. I don't think it's a buyable opportunity for Apple. I mean, it was a huge stretch, and Apple scored all-time high. Like our average cost here in Oz Wealth is $118. I'm not gonna be buying any more Apple. I'm just sit and watch. Some people looking at it as like a huge buyable opportunity. I think what's huge buyable opportunity is the index funds right now, as tomorrow going to unroll entire outcome of the market. We had a big sell-off all the way to the mid of the week. Now we're recovering a little bit. Today is also a little of a pullback. Let's see how tomorrow is going to go. But for myself, I think I'm going to be buying more index funds tomorrow, and I'll see how the day is going to go. Visa, some of gain at 1.42%. SPHD, the ETF ended the day flat. Realty Income, 200 shares, a little more of a 0.5%. Stag, a little more of a 0.5% of a gain. AGNC, 0.25% of a gain. Main Street Capital, almost flat. Johnson & Johnson, loss of 1.5% almost. Bank of America, big loss tomorrow. It's not that bad for today. 0.21%. American Express, 0.20% of a gain. Caterpillar, loss of 1/3 of a point. Coca-Cola, almost flat. Philip Morris, 0.25% of a loss. Pembina, 1.14%, and WP Carey, almost 0.8% of a gain. As for the overall portfolio, as you see here, which stands for 3 or 4 individual accounts, the HSA, the Robinhood account that we just shared with you, Roth IRA, and the SEP IRA, which we just opened recently. So the HSA stands at $4,168. Robinhood, it's $90,511. If you add the cash as well, Roth IRA, we're going to be crossing 20,000 tomorrow, and the SEP IRA, we're at $525. And the overall value of the 4 investing portfolios is $114,739 as of today, with a loss of 0.1%. The annual income of dividends is still the same, almost $2,000. We're almost $60 away from $2,000 a year passive income from dividend out of doing nothing at all. The dividend yield is 1.69%, yield on cost 2.10%, and the beta is 1.42. As for the expected dividend coming on the way, we get paid 5 times a day from WP Carey, Realty Income, Stag, Main Street Capital, and I believe we also get paid from AGNC. What we are seeing coming in the way on August 10th, we are going to get $15 from American Express and AGNC. We're going to get $18 from Main Street Capital and Pembina. And don't forget also SPHD, they usually pay at the end of the month. So we're getting like some $20 on the 30th. So it's not totally bad. As for the year, as you see here, the spread for the payout on dividends on July, we're going to get $150 total. August, we're going to get $136. September, we're going to get $135. October, $150. November, $136. The big paying month is December, where all the Schwab index funds and Robinhood account are going to be paying at the same time. So we're going to get $411 in 1 month passive income out of doing absolutely nothing. January, I believe, is going to be the lowest paying month, $129. February, $136. March, $135. $150 on April next year. May, $136. And June, $135. And that's if our portfolio stays the same. Of course, we're going to be reinvesting dividends. We're going to be adding more, and those numbers are going to increase through the time. The total goal of this total portfolio is to build a sizable portfolio where those numbers are one day going to be big enough to cover my monthly expenses. Our plan is to get there probably by 5 to 7 years, and then we just collect dividends and live off the dividends. So that's the plan. That's why you see the portfolio is kind of mixture of growth, value, and dividend stocks. Dividend stocks are the primary foundation of this portfolio, and we're going to be always keep buying blue chip kings or aristocrat dividend stocks that you're going to be paying dividends monthly or quarterly along the way. If you look at the market appreciation through the history, 70 or 80% of the market appreciation comes from stocks that pay dividends. So don't underestimate stocks paying dividends. I know it's boring, I know it's dull, I know it's slow, I know it's such kind of old school, but this is the total investing strategy that's been tested through decades of investing and data that we have from S&P 500 to the total stock market. All the successful investors, they tell you, invest in stocks that pay dividends and you will be winner at the end of the journey. Coming back to the main portfolio, as the diversification for our portfolio today, based on how the market behaved today, Tesla is still 38% of my portfolio, information technology is 27%, real estate is 20%, financial is 7%, consumer stable is 4%, energy is 2%, industrial is 1%, and healthcare is less than 1%. As you see here, Tesla is still dominating the big chunk of our portfolio here, and information technology is also like more of a quarter of the portfolio. As of today, things are always open to be changed based on how the market behave, but for now we're doing the best kind of performance based on this kind of structure. If you go to the income expected from dividends, realty income still taking the lead as of the highest paying dividend stock, as almost 30% of our income from dividends comes from realty income, followed by SPHD 8.2, AGNC 7.4, Schwab 6.8, Schwab S&P 500, the index fund, of course, and the Main Street Capital 6.3, Apple 5.4, Pembina 5.2, Schwab Total Stock Market Index Funds 4.4. We're going to be adding some funds to this account, to this index tomorrow, and WP Carey 4.3 and Coca-Cola 4.3. And that's it, guys, for this week. If you have not signed up for Robinhood yet, links are in the description below. You can get a free stock from Robinhood. It's a win-win deal. And if you have not smashed the like button, please do so. You can kick it, hit it, smack it, do something to it. It will mean a lot to me. And if you like the content of this channel in general, please consider subscribing and hit the notification bell. And until next time, you guys take care.